This is a Stock Trading Reality Podcast, episode 113.
So I decided to take the leap. I was like, obviously he knows what he's talking about. I have no idea what I'm doing here, and I need to have some sort of structure in order to be able to proceed and do this.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. Did you know he has a gun YouTube channel? Play Trader.
Yeah, so I guess I will plug my gun channel that I do have on YouTube, Clay Trader Guns. If you just want to search for that on YouTube, it will take you to the channel, and it's just a hobby. And I thought, you know what? I have a bunch of cameras for claytrader.com that we use for the videos. I like to shoot. I like to do whatever. Nate, the producer of the podcast, he likes to film and edit and stuff like that. So why not just shoot some gun videos, throw them up there, and if people want to watch them, great. If not, oh well, at least we know. So if you're into shooting, then Clay Trader Guns, check it out. I am not a pro by any stretch. I'm just an average guy that likes to do it, that has fun with it, and I've thrown some videos together. But if you're curious on maybe you're in the market for a gun or want to see and get some thoughts on one versus another, then yeah, check out the channel and maybe it can help you out. I know our esteemed co-host, he also enjoys shooting, and now being out in Denver, a little lots of real estate out there to probably shoot more so than Southern California where you were, but. I mean, do you have a gun channel that I'm not aware of?
No, I don't have a gun channel. The YouTube days for me are long gone, but yeah, I'm hoping to have kind of similar to you a nice little kind of spot to essentially a homemade range. So I'm hoping to do the same exact thing. But yeah, the next purchase for me is a 357 Bear Defense gun if push comes to shove, unfortunately. But yeah, I'm also in the market for an AR. So if anybody wants to just donate one to me, Clay's been saying I got all these mine shares, so I'd be happy to pay you in mine shares if you'd like.
Well, in all honesty, who knows? Maybe somebody would be willing to hook you up, and maybe not necessarily free, but at a severely discounted rate. So, and the offer stands for me. If you want to offer me a great deal on a gun, I'm all ears. So, I guess we'll just lead with that, Ches. See if we can get any hot offers thrown our way.
Looking for gun sponsors. That's what we're doing now. We're shilling.
Yeah. Maybe next episode will be brought to us by Glock or Smith & Wesson or something like that. But hey. Here's hoping. But anyways, we have a great show today with GeeSama is his alias that he goes by in the chat room. And for those of you that are regulars in the chat room, I'm sure you've seen him. I'm sure you've seen his alias, which we do talk about a little bit right at the beginning. And yeah, he's a very active member. He's a great member. He's been around for a long time. But he's had quite the rocky road, but he's in a great spot right now. And yeah, I can say I'm very proud of him. I know Ches is, because especially Ches can relate to a lot of the things that he went through. And it's just one of those situations where you got to find your groove. And he did a lot of zigging and zagging, but he's gotten a groove, and the groove is paying off for him nicely. And, he's been growing his account over the past several months in the direction you want to grow it. So without further ado, let's hear from G. G, welcome to the show.
Thank you. Thank you for having me.
Now, GeeSama, how do I say your name? What is your alias? How do you say it in your mind?
Yeah, I mean it's GeeSama, but most people just call me G.
All right. So, and your avatar is like is that a Pokemon thing, or am I just an idiot? What is your picture? Describe it to the members in the chat room that see you on a routine basis.
Yeah, it actually is a Pokemon. It's Gengar, one of the original 150. Big Pokemon fan.
Okay, so do you do Pokemon cards and stuff?
I collected them in my childhood. I have the original 150 framed up on a wall, but aside from that, I didn't really follow it along too much after that.
But they're worth money. So is there a trading component that's within Pokemon cards to begin with?
Oh yeah, definitely. There's some cards that have increased in value over time just because of rarity. They're no longer being produced.
So it's like a stock market in a sense. It's just the Pokemon market, I suppose.
Yeah,
so
it's just a different market. Same exact idea, though.
Nice. All right. Well, before we got started, I'm a pretty aware person, I would say, and I am aware that I'm probably going to be the third wheel as we progress through this conversation. because G and Ches are very similar. They like to do the same thing. But I have no problem being a third wheel. So this might be like an awkward date. But Ches, are you okay if I'm the third wheel on you and on your and G's date here over candlelight?
I think you should just force upon him how he day trades and scalps, even though he doesn't do really either of those anymore. But I think you should just force it on him to make this podcast as uncomfortable as possible.
There we go. Uncomfort. That's what we always go for here on the show. So if you like to be uncomfortable, please volunteer to be on the show. But anyways, where did all this start for you, G? I know you've listened to, you said 80 to 90% of the podcast already, so you know this question's coming your way, but where did you hear about the market, and what got you interested enough to, want to kind of get more involved with it?
Yeah, I mean, my journey is relatively short. I actually only got involved into the market about 2 years ago, so I was back in 2015. It was at my job. A bunch of my peers were passing around a PDF file, and it was the Rich Dad, Poor Dad book, and I kind of got started reading that book. As I was going through the book, kind of the concepts they touch upon there, like the rat race, and, kind of chimed with me. I was like, I don't want to be part of the rat race. I don't see myself working here for the rest of my life. And I need a solution. I need to find something that's going to get me out of the rat race. So generally,
penny stocks are the thing to do. Got to get rich quick.
Generally, he covers three options. You have, come up with a business idea, real estate, or stock market. From the three options, I didn't have any business ideas. I'm an introvert, so I generally don't work well with people. So I figured real estate's not going to do well for me. The only option I had left there was stock market. So that's how I kind of started looking into that.
Now, when you say looking into that, did you just kind of look at, E-Trade and TD Ameritrade and any of those big brokerages and looking for like dividend strategies or something like that, like Warren Buffett? What was the introduction to the stock market look like for you?
Yeah, so just like any other person probably going into the market clueless, I just started Googling things, kind of Googling how to make money in the stock market. I came across a couple of penny stock gurus when I first started off. I want to say that I read through a lot of information first, but at the same time, after scanning through information, I came across ticker symbol. I believe it's Levy, Levy, at this time, and it was an acquisition company. They were going to acquire Del Taco, and I'm in Florida. In Florida, there's actually, specifically in Orlando, where I'm located, there's only 2 Del Taco locations. And I kind of read into the Kool-Aid, kind of that they were going to expand, they were going to acquire them, put more locations. I figured I like Del Taco, it's a good place. So I bought 30 shares of that. It was trading at around, I think it was $11 a share at the time when I purchased it. And this was, for me, it was more of a long-term play. I was kind of just waiting to hold on to it, see what happened, since these were plans that they were planning to have, 6 months down the road, a year down the road. As I saw the price started going up over weeks, and I decided to put in about 400 more shares I bought. So I went a drastic jump from 30 shares to $400 more shares that I bought into Levi Acquisitions.
What was the share price at this point?
It was trading at roughly $13. I think it was like $13.20.
Okay.
So
you're putting some money into this thing then.
Yeah, not knowing anything at this point, but yeah.
Now, my question, just based off what you said, you want to get out of the rat race, and you read this book, and one of the ways to get out of the rat race was for the stock market. And I fully agree with that, kind of, because long term, yeah, that can get you out of the rat race, but it's long term, so that takes time. So were you going into the stock market with a much shorter type strategy, or what exactly, how was the stock market going to get you out of the rat race? Because you just said that with this one, it was a longer term play. So, but longer term isn't exactly getting you out of, the rat race short term, if that makes sense.
Yeah, I didn't really have any type of plans or anything as far as, wanting to trade short term or anything along those lines. At the time, I just knew I had to make some type of move. I had to make some type of, take the initiative and make my money work for me, whether it was, 6 months down the road, a year down the road, but have something that was going to make me some sort of money.
Okay, so you just took the general concept of, hey, within the grand scheme of things, within life of the rat race, you got to start to take control. And one of the ways is with the stock market. So that was your ideal plan. It's not like you were like, oh man, I'm going to take control, get out of the rat race in the next 3 months. It was nothing like that.
Yeah, he took the first step, but wasn't looking to get rich quick. So that's good, because that's definitely keeping it realistic.
Yeah, and that's and I think a lot of people, probably myself included, we do the exact opposite. Oh wow, the stock market, I can get out of the rat race quick, and then all of a sudden you start doing really irrational things. But I don't know. I have no idea your story here, so maybe irrationality is approaching us. We shall see. But you make this trade, then you add more shares to the trade. So how did this all unfold from that point after you averaged up to 400 shares?
Yeah, irrationality is definitely around the corner, but
spoiler alert.
So I averaged up into about roughly 400 shares, and at that point, I think it was in the course of maybe 3 weeks, almost a month, the shares were trading at roughly $16, and at that point, I'm just like, all right, I'm gonna keep holding on to this. I'm up quite a bit, and I was looking at the charts because at this time, while I was going through, at this time, I had gotten my hands on some kind of some free education, kind of just recognizing basic chart patterns, but I didn't really understand candlesticks or anything along those lines. And I see the chart was pulling back. Again, I had no idea what support or resistance were, but I see price pulling back, and I was like, you know what? Just in case this decides to collapse through, I'm not willing to give my gains away, so I just ended up selling the entire thing. Ended up profiting, I think it was roughly like $800 to $900 on that trade, which was in the course of about a month and a half.
Not a bad trade. Now it's time to quit your job and quit the rat race and just go all in, right? Am I right here?
Something like that.
Oh no! Keep going. Right, so what happens after this then?
Okay, yeah. So every time I entered a position, I would go to StockTwits and look up the ticker symbol on StockTwits and just read everything that pretty much, not to talk bad about anyone, but people that have no idea what they're saying, I was just read everything that they're saying and kind of form my bias depending on how many people were saying bullish and how many people were saying bearish. And pretty much break even throughout the course of maybe, like I said, those 2 months. I would win some, lose some, but never much. Like the losses were never too big and the gains were never too big either.
So that brings up a good point, because I want to touch on that, because most people just get so emotionally involved, especially if you're looking up StockTwits and forming biases based on people saying XYZ to the moon, or this thing is crap, it's going to zero. So first off, explain to us how you were able to kind of essentially keep your losses small. Did you just emotionally say, ooh, it's down this much, I'm not willing to hold it anymore? Or what was your criteria for exiting? And as arbitrary as it is, it's just very, very rare that people actually break even when they're kind of trading. First off, a newer trader, and then secondly, trading kind of penny stocks, which move a lot of times pretty volatile.
Yeah, well, I never really traded penny stocks per se. I never liked the 0001s or any of that. I traded sub $5 stocks. So I was generally trading $1, $2 stocks. But yeah, they are pretty volatile. And generally, I know it now, but at the time, I was pretty much willing to risk a dollar amount. That's what it was. I wasn't really basing any type of decision off the chart or anything like that.
So it was never really a logical risk. It was logical in the sense of, okay, well, I'm this strict dollar amount, but that's always, and we've gone down this rabbit hole many times. That's why, I understand risk.
Nothing.
Yeah,
it's definitely better than nothing.
That's true. It's better than nothing, but there's more layers to it than, I'm willing to risk $50. But what happens if that $50 puts you at a spot in regard to the chart and the trade in general that doesn't make any sense? And again, wait, how can that be the case, Clay? Well, that's just an example on why there's more to trading than what appears on the general surface of, catchphrases, cut your losses, use a stop loss. Those are important, but they're just catchphrases. There's more that goes into that. And well summarized, G. I like how you said, looking back now, you know that it didn't make sense. So, but at the time, it was one of those things, you just didn't know what you didn't know, right?
Exactly. And I remember specifically how I came across you, just one ticker symbol in particular. It was ENZN. This was, like I said, back in probably around May of 2015. I was kind of looking for breakouts, and this ticker symbol met the criteria for a breakout. It hit one of my alerts that I placed about 2 weeks ago. So I bought the breakout, and I ended up becoming a bag holder on that on that ticker. I remember I was every day going on StockTwits, going through the forums on ENZN, and I came across one of your chart analysis on ENZN, and I remember it was probably a month into it that I had already been holding the position, something about a little bit of bullish momentum. So I was like, oh, okay, I mean, this guy sounds like he knows what he's talking about. How come, I have no idea, like, what these things mean, like technical patterns or anything along these lines. So I started looking into your website. I started reading the testimonials. I went through everything. I'm very frugal with my money. So before taking the leap, I did a lot of research. I diligently, and it's like at the end of the day, from all the other courses that I had seen that were X amount of money, I realized for the amount of content that you were offering and the fact that I was able to finance it with PayPal credit, I was like, oh, that's something that's still feasible for me. I don't have to come out with the $2,000 out of pocket right now. I have the money just in case, but I'd be better off breaking it up in monthly payments. So I decided to take the leap. I was like, obviously he knows what he's talking about. I have no idea what I'm doing here, and I need to have some sort of structure in order to be able to proceed and do this.
Nice. I want to just go back a little bit, because we just discussed you were doing good with keeping your losses small, and then all of a sudden you became a bag holder on this one. So what all of a sudden clicked that you decided just not to sell? Why did you keep holding?
I want to say it's just because I kept going to StockTwits. Unfortunately, I kept reading how it had a dividend that it was going to pay out.
Oh, the dividend trick, yeah. The approaching dividend, one of the oldest tricks in the book there.
Yeah, so I mean, all in all, that position ended up being break even. I held it for about, I want to say, maybe 5 months. And when the dividend did get paid out, then I ended up... Actually, no, I'm sorry. It was before the dividend got paid out. It rallied before the dividend, and I ended up getting out at break even. Okay,
so it was one of those that were time value of money. You probably, lost a little money there if you had to sit there for 5. I mean, that's almost half a year. You had to sit and hold and hold and hold. And that's I'm glad you, great human psychology. You basically drank the Kool-Aid. You kept reading what other people said on StockTwits about how great it was, and yet the price just kept going down and down and down. I know I've been there with my early penny stocks and stuff like that. But it's amazing how you just start to sip a little bit of that Kool-Aid, and then all of your strategy, which Chez and I were just complimenting you on, you were doing a good job of just at least breaking even. All of a sudden, you break all those rules because of what some random person on StockTwits is typing about how great it is. So you break even, it bounced back, and it's. I mean, 5 months has passed. So during this 5 months of holding, were you doing other trading, or were you just holding that stock the entire time?
I actually was, yeah. I mean, like I said, I got into that ticker symbol right around late May, and I ended up purchasing CTU around early June. So, and I did
you do Inner Circle first?
I did actually.
Okay. I feel like you were. I mean, you showed up in the chat room if I remember right, because you never changed your avatar either, have you?
I'm trying to remember.
I don't think you have. That's how I remember all this stuff.
Because that's why you're on Clay's good list, because people who change their avatars drives Clay nuts.
Because this is how I remember things. You never have changed. So I remember seeing your avatar way back, and then not that much later, all of a sudden you had the CTU badge next to you. So I'm like, all right, well this guy's legit. He's serious. He's here to learn, not ask. I won't go down that path because some people. What are we gonna make? Were you in there? Were you in there a couple months ago when the guy came and asked us all about a penny stock that's like at, I don't know, 008, and we just were like, no, that chart looks pretty terrible. He's like, you guys are all idiots. This thing's going up to $2 or something. Were you there? Were you in there for that? I feel like you were, but maybe not.
Probably. I've seen my fair share of people, trying to average down and asking, where is this going?
Yeah, and it's just like, you might want to rethink but anyways, point being, I remember you showing up, and then all of a sudden, you were taking the courses and all that stuff, and I thought, all right, well, this guy seems legit, and so far so good. You're still around. You still haven't blown up your account or any of that, so that's obviously been a while now, going on 2 years now as of the recording of this podcast. So you get CTU, you're break even now, so you finally get out of that trade. What are your steps from this point forward?
Instant millionaire. Podcast over.
Yeah. See you later. See you next week.
Yeah, so while I was bag holding that, because I got CTU just a month after I got into that ticker, but I was still holding it for several months. So while I was holding that ticker, I actually started going through the education, and I went through robotic trading, robotic skill sharpening, RVR, and I just started downing all this information. Now you're going to be a little upset because I didn't paper trade as long as I should have paper traded, but I started.
If you tell me that you made all kinds of money without paper trading, then that's fine with me. But because it's going to vary. But I don't know. I don't know your story here. So
yeah. So what happened was, I went through all the courses. I made sure I went through advanced options, option simplified, RVR, shorting for profit. I pretty much did them all. After I kind of got a general concept of all of them, I started putting them to application on paper. And once, I wouldn't say maybe I paper traded for about each strategy, maybe about 2 weeks. I didn't paper trade them too long. And I felt, all right, well, I kind of have the general idea of this. Now, seeing this now in hindsight, I feel like I should have paper traded a lot longer. I took a little bit more funds that I had set aside that I was going to eventually put into the market. And I opened up a TD Ameritrade account with $2,000 for margin. That way I could trade options. And, I started, again, the same thing, since options are, a little bit more of a different beast, so to speak, with all the different Greeks that you have. I didn't understand why sometimes I would be right directionally and still lose money. So that was a little bit frustrating, and that led me down very bad rabbit holes, averaging down to try to get my money back, or it's going against me, but the general premise is still right. So I would average down on contracts to try to get to break even. So that created some very bad habits.
Options, I like, it'll definitely be a quote that options are essentially, they are definitely a different beast in the sense of what you can do. It's always something that we bring up, that options are not friendly to bag holders because there's an expiration date. You can't, this isn't like, some of that breakout trade where you ended up bag holding for 5 months. They have an expiration date, and when that expiration date comes by and it doesn't meet a certain criteria, you've lost all the money that you've put into it. So yeah, averaging down on things like that in options is not something we ever recommend, just like we don't recommend it anyways. But I wanted to touch back on something else just to clarify for the listeners. So when G said that he needed $2,000 for options, what he meant is that he needed $2,000 for marginable options. So you can totally trade options with less than $2,000, but it'll be on a cash account. And we'll link a video about kind of the differences between that and how that affects PDT. But just wanted to clarify for the listeners. But yes, averaging down on options, not a very good thing. So obviously, how catastrophic were the losses?
It was pretty much break even for the most part. I had some very big gains, but then I also had some very large losses. I could remember averaging down up to 5-10 contracts. So I mean, you could imagine the losses and the gains from that. But from that point, I was like, I didn't like the theta decay so much. I had a basic understanding of theta at that point. And I didn't like the decay hurting me so much, so I started looking more into the advanced options, more or less settling on vertical spreads. The only thing is, I wasn't doing them how I do them now, but I was doing a weekly vertical spreads. And it was very profitable, I guess you could say. I got a lot of... I did grow my account significantly with the vertical spreads, but again, I got very stubborn and I got very hot-headed, thinking that I knew everything, and it didn't last too long. I ended up back at break even with that one again.
Okay, so my question is
right there.
yeah, the fool's gold confidence. But sir, going back to the whole paper trading thing, and you made the comment about theta, and you didn't quite understand. Had you paper traded more, do you think you would have realized the implications of theta before you actually did it with real money? I mean, do you think that was one of the pitfalls of maybe not paper trading? Like you self-admitted, you probably didn't paper trade as long as you should have.
Most definitely, yeah. I would have had a larger sample size, number of occurrences to see how it actually plays out and how things work.
Okay, because that's a great point on your part. I like how you said and made the comment. Oh, theta was really getting you, and we have plenty of people in the community that trade options the way G was trying to and not having success. But the kicker is the point here is not it's impossible to day trade options like G was trying to do. The point here is that there is an aspect that kept biting G that he didn't quite understand. And as he just said, he didn't quite understand it because, well, he never gave himself enough time to understand it via the paper trading process. And like I said, you didn't have enough, your sample size wasn't big enough. You didn't have enough occurrences to really take note of what needed to be taken note of. So that's one of the great things that needs to be taken, and why paper trading is so important. I just want to get my feet wet. I want to get my feet wet. Well, while you're getting your feet wet, you're going to be just getting kicked in the mouth, losing all sorts of stuff, because there might be something where, yeah, you learn about theta in this case, but you don't quite understand all the implications of theta. But had he been paper trading, he would have. So great talking point there. Yeah, thank you for bringing that up, because that's one of the great pros of paper trading is, it can save you from what G had to go through. So thank you for sharing that. What I'm assuming was a pretty frustrating period, right?
Oh, yeah, definitely. I mean, especially because, like I said, I was trading the weekly contracts. I was trading off the 5-minute charts, maximum 15-minute charts. I was trying to really drill down on the time frames because I was trying to make returns much quicker. And I feel like that's actually one of my downfalls, because at least what I know now, my comfort zone is more longer term trades, and I was trying to fit a round peg through a square hole.
Hey man, I was just gonna say that. Well said. Perfect, man. Great minds think. Well, at least one great mind here. I don't know about how my mind is, but yeah. Well, I was just gonna say, oh, that sounds like you, and you took the words right out of my mouth. So you went to the vertical spreads and you grew your account. I mean, are you willing to share, like, you grew at 60%, 70%? Because we all know it went back down, but how big did it actually get before it went all the way back down? Okay, so you tripled your account, and then you tripled it back the other way to break even.
Yeah, I had like a slight profit, I want to say. So but I considered it break even pretty much. I had like about 2,500.
Well, you triple your account, and then you have a quote unquote slight profit regardless, we're splitting hairs at that point. So what had you getting so stubborn? I mean, why so stubborn after you had grown your account? I mean, was it just recklessness, or I guess we like psychology here. So what do you think? Where was this stubbornness coming from?
I think more or less it's just not wanting to admit that I was wrong. That let's say I was going for a long play and it completely went and violated my stop, and I'm like, well, I mean, I have 6 things in my favor saying that it's bullish. Why is it bearish? Why is it going down? And just not wanting to accept that, there are times where no matter how bullish the chart may look, it's still going to go against you. That's just the odds playing out. And that being said, those times I was very stubborn. I didn't want to admit that I was wrong in my analysis and that the price was going against me. So I would bag hold. I would hold it. I would average down. Again, I still had those bad habits. So I would add another contract, average my price down, and hope for a bounce to try to come out for break even. And then when it didn't come out for break even, I would just kind of uncle it and take the loss.
Quick question: you said you did your analysis. How long would this analysis last for? Like, how much time?
I mean, I really didn't do multiple time frame analysis back then. I kind of looked at maybe, since I was doing shorter time frames, I would look at 30-minute, 15-minute, 5-minute, and 2 minutes. And kind of just look for any type of patterns that I could recognize. Obviously,
so how long did it all take you to find an actual trade and put it on? Like, how long physical time wise? 15 minutes, 20 minutes, an hour?
I'd say maybe about 10 to 15 minutes. It didn't take that long to scan through some charts, look at the charts that I liked, and put on a trade from that point. Okay,
so I mean, the point here that I'm trying to get at is, let's say 15 minutes. Now, if you like to watch TV, 30 minutes, that's an incremental, TV show. If you spend half of that TV show scanning, running, trying to find a trade, I mean, 15 minutes, it's not a super long amount of time, but it isn't 5 minutes, it isn't 2 minutes. 15 minutes is a decent amount of time. And what I'm trying to get at here is the market doesn't care. The market doesn't care if you spent 15 minutes or 15 days with a trade idea. If you're wrong, just get out, because that's where a lot of, I didn't want to admit I was wrong. I just spent all this time, analyzing. So there's no way I can be wrong here because I put so much time into it. Sometimes, like the market, not sometimes, all the time, the market doesn't care how much time you spent trying to do something. If it violates your plan, don't try to justify it like G was trying to do with well, I did my analysis. I'm not wrong. It'll go my way because I did my analysis and I spent 15 minutes doing it. Or maybe you're saying I spent an hour doing it. Market doesn't care about how long you put in anything. I mean, Ches, am I barking up the right tree here? The market just doesn't care.
The market is the most level playing field for that exact reason. The market literally doesn't care about your needs, wants, how much time you've put in. It doesn't care at all. It's all about how you approach it, and that whole thing is on you. But yes, you nailed it. The market gives no craps about any of us in the market at all.
Yeah, so the market is crapless, I guess, since it giveth no craps about anything. It is what it is. So you triple your account, then you go to slight profit. And what is your next step from here in your journey?
So one of my weaknesses at this point in time that I would attest to is that I strategy hopped a lot. Kind of looking for a holy grail, so to speak. So I went from just trading options directionally to then using advanced options and using vertical spreads. From that point, I said, well, maybe these aren't for me. Let me try something different. And I decided to go down the futures route at this point. This was around late December of 2015. So I started looking into futures. I paper traded them for a bit. So this is kind of around, I think, January, and the time where everyone in the chat was talking about Apex futures, and everyone was kind of getting into the futures. So I paper traded them for a while, and I decided, I want to say probably a month that I paper traded futures. And I decided that, I've been consistent with it. I've been managing my risk. I feel like I should, fund an account and let's give futures a try. And sure enough, I started trading futures live in February. And I'm not sure if you recall, but I think the beginning of February is where the market actually bottomed out. And so pretty much from that point forward, it just rallied every single day. And obviously I didn't know this at the time, but I was pretty much riding the coattails. Every single day I came in, and I had some significant profits every day. Just kind of, going 2 contracts, 4 contracts. Again, I was over leveraging myself, not knowing it at the time. But every dip I would buy it. It's just kind of buy the dip. Every single time it came down, I would buy it and buy it. And this is where
here comes the heartbreak. I can feel it coming around the corner.
Yeah, this actually comes out to be my my largest loss to date. It was, I kept buying the dip every single day, and I got hot-headed again, kind of thinking I know everything. I've had a 20-something plus day winning streak. I haven't had a single red day, and sure enough, I kept averaging down my contracts every time I was buying the dip. And lo and behold, that's how I took my largest loss, which was about $5,000 on a day trade. So
and I want to jump in here because wow, do I feel old because we got into this in 2015 and it's 2017 now. Geez, I can't believe it was that long ago, but it was. And yeah, we were all getting into futures, and similar to your story, because I don't want you to feel alone here on this podcast. I'm all about friendship and camaraderie around here, while Clay's trying to make everyone uncomfortable. But essentially, I was in the same. I can hear you laughing over there.
Yeah, I know. I'm trying to think of something witty to say, but I'm coming up blank right now.
That's okay.
Well done. Well played, sir.
So I was actually in the same boat as you, and I probably took I didn't actually take a loss, but it was something that really opened my eyes up, because the market was just going so directionally one way, like a freight train. Like you said, every kind of dip was essentially a buying opportunity. And what I would do personally is like, I know charting. It's as simple as support and resistance. So if the order would go against me, I would just buy the next support. And one of those days, every support for like 4 levels was cracked. My account was fully leveraged to the max. I'm looking at an unrealized $4,000 loss. And magnificently, the trade comes back and I make money on it. However, what I want to emphasize here is that I use that as the most eye-opening experience I've ever had in my life.
After you changed your pants, though, right?
After I changed my pants multiple times. I was just in adult diapers at this point. But after that moment, and I walked away with like a $350 profit, and I was like, that's a good day for me. And I was just like, nope, never again. And that was Clay in the other podcast. We asked, like, what's the longest break you've ever taken? After that event, I actually took, I think, almost a 2-week or a 10-day break from trading because I was like, this isn't trading. Somebody who does this for 10 years doesn't put 50% of their account in the hole in one single trade. And that's when I was like, I will never do this again. That was like my eye-opening risk kind of slap in the face, and while G had to unfortunately stomach the loss, I got lucky, and I recognize that because not everybody gets lucky. So I just want to let you know that I was there, and I think it's actually almost a rite of passage. Unfortunately for us, other people don't need to repeat our mistakes, and I'm sure you'd agree with that. But yeah, it's kind of mind-blowing, right? When the market the winds change, if you're not prepared for it, it can literally just take you to the woodshed.
Definitely, yeah. Thankfully, I like I said, I did have a sustained winning streak, so the loss didn't put me out by any means. I was still up, but that definitely was an eye opener. Actually, after that loss, I closed out my account. I withdrew the funds that I had in futures, and I actually took a break from trading. I took 6 months off. I was like, this definitely, I'm doing something wrong here. There's no way I should be losing that amount of money in one day, regardless if things are going sour. I knew something was wrong. I was averaging down. I needed to kind of own up to my mistakes, so to speak. Like not wanting to be wrong in direction. So I took 6 months off from trading. I had some personal things going on in life as well, so I didn't focus too much on the market. I would look at it, here and there, and throw on some paper trades when I saw a setup that I thought was good, and I would monitor it. But aside from that, I didn't actually do any live trades until August of 2016 again.
Well, good for you for stepping away. And what fascinates me, and you nailed it. So you are definitely very self-aware. Is you're just riding the coattails of the market. Meaning, I guarantee you there are a whole, and you admitted to this, but this is why catastrophic losses happen, because you say, I was on a 20-day winning streak. Yeah, but how many times during that 20-day winning streak were you, and I'm not saying you, G, just you in general, you as a listener, if you're on a winning streak, how many times are you breaking rules during that winning streak that allows the winning streak to continue? That's the thing with the winning streaks and with things like that is when you're newer and you're not aware, the only reason you have that freaking winning streak is because you keep breaking all these rules and getting away with it. But as we just heard from Ches and G, one of those times you're not going to get away with the rule breaks or the multiple rule breaks and all those gains that you just made from your winning streak down the hole. But, when you're riding the coattails, like G admitted he was doing, I'm sure, do you realize that now, G, would you say that you were actually breaking a whole bunch of rules prior to you finally getting bit by it?
Oh, yeah. I think I broke at least 2 rules a day.
Because the market was so strong, you kept getting away with it.
Right.
So that, just keep that in mind, listeners. A huge, and this is good stuff here because this is very practical stuff. Ask yourself, if you're on a winning streak right now and you're feeling pretty good about yourself, and maybe these guys are idiots. I got it all figured out. I'm on a winning streak. Be honest. Are you really on a winning streak, or are you just on a luck streak because you keep breaking a bunch of rules and the market just bails you out? Only you can answer that as a listener. But awesome, yeah, G, well said, because that's a very important talking point. So at what point does futures, are done, 6 months away. When does the options farming start to creep into things? Because we're not pressed for time yet, but looking at the time, we're getting somewhat there. So I want to see you and Ches just bromance out here and just, so when did options farming start to, come along within your journey?
Sure. So I'll skip a little bit ahead. During the summer, during that time that I was not trading live, I actually paper traded Forex for a little bit. Started looking into that and decided it wasn't really my thing. So around, I want to say October is when I started looking into kind of, just selling premium, like option farming. I, started looking into Tasty Trade. I started going through their stuff, coupling it with the advanced options that I had learned from your courses, and it really resonated with me. I mean, I'm a numbers guy, I'm a math guy, and just having probabilities laid out in front of me as far as this, I'm willing to take this much risk for this much probability of success. I'm placing a trade, whether it's above or below a support or resistance zone, and just being able to manage my positions. If something does go against me, I think that's one of the aspects that really, that really stood out to me, that I don't necessarily speaking have a stop loss. So I don't have to admit that I'm wrong, I guess, so to speak. Even though there are points where, you would exit the trade, but I can make adjustments or manage my position to reduce my overall exposure. So that's something that really stood out to me and I really liked.
And I want to touch on that too, because I actually think that's a reason why it totally resonates with me. And like G said, it's not that we're not taking a loss; it's just that there are strategies that we can use to reduce it. So for a slight example, I was completely wrong about UVXY. I thought UVXY would go up sooner than it did. It didn't, so I essentially went inverted. And I'm not going to even go into that because it doesn't matter. It's just one management technique. And I turned, what would have been like multiple $100 loss into a $5 loss based on an option strategy. And for me, that's chalking up a loser. If you can turn your losers into $5 losers, you can do that all day and not blow your account up. So for me, like options are totally fit that wheelhouse. But yeah, it's funny how trading in general is just more of a journey of self-discovery in the sense of, and I say this every podcast too, you got to find what you're comfortable with, what works. And for me, it was setting my risk in advance. And no matter how hard something gaps up or down, it doesn't matter because I've set my risk. I know how much, if the world were to almost end, I know how much I'm going to lose and then my account will still be intact. So I think I'm hearing G over there doing some trading. I'm hearing some dings over there, but I have to admit I was also putting on some long delta. So you're not alone in that.
Are you trading right now, G?
Just some paper trades right now that I'm doing on the E-mini micro futures for euros.
Sounds
keeping himself fresh.
Yeah. Keeping so
using his charting.
You are trading though with real money now, right? We're doing the advanced options.
Yeah, since November, I went live in November with live money, doing advanced options, and since then it's been very consistently profitable. I would say not by a huge margin like I was, before taking so much risk, but it's something that's been consistently and gradually be building up.
So 2 keywords: consistently and gradually. Yeah, I get the other way may have happened quicker, but like you just said too, you were taking on a whole lot more risk, mixed in with a lot of bad habits. And as you've learned, and hopefully listeners have learned, bad habits, not exactly a long-term recipe. So yeah, you've been at it for about almost 6 months now, 5-6 months. Slow and gradual. I mean, if you're willing, whether it be an absolute dollar value or percentage, I mean, how has it been going since you went to live money? With this, quote unquote gradual, but more so consistent process.
Yeah, I'm actually since November when I funded the account is up 15%.
Nice, very nice. So 15% return on a 5-month, 6-month period. Not too shabby at all. And
financial advisors would kill for that return, just so that your people out there listening, if you can return 15% a year and do that consistently year over year over year, you're destroying it. It's absolutely awesome. So remember, he's talking about his entire account value too. He's not talking about 15% of his trade or anything like that.
And to keep it fair, he's not saying that he's got some $5 billion hedge fund that he's running that he got 15% return on too. So he's not sitting here implying because things get warped a little bit there. But regardless, from what you were doing and from what we've heard, I would assume that you're pretty happy with the progress. Maybe not necessarily the rate of it, but have you learned that the rate of growth isn't really the most important thing? It's more about those habits and the process in which you are growing the money?
Right, yeah, I'm taking more of a longer-term approach now, now that I'm farming, more so to speak, since theta is on my side now and my trades generally span out anywhere between, 20 to 30 days on average. I'm taking a little bit out of every paycheck and funding the account with a little bit more money. That way I can, consistently add on more positions since I know it's all based off of number of occurrences.
Nice. So how often are you paid? Is it twice a month, every week? What's that look like?
Yeah, I get paid bi-weekly.
Okay, so I like that because it's not like all of a sudden you're getting paid every week because, I don't know, maybe I'm just thinking out loud here, but to me that would be like, all right, I think you're putting too much money into your account too fast and maybe your account is growing faster than your comfort level to manage that amount of money. There needs to be a good correlation between comfort level and size of account because all of a sudden if you putting money in there all the time and you're not quite ready for it, you're going to risk putting on too big of size. But I'd say bi-weekly, if you're just throwing in a little, how much do you throw in? Just like a small percentage or?
Yeah, anywhere between $100 generally is what I throw in.
All right.
Yeah.
So it's nothing insane. So it's an amount that you can slowly learn to manage as you progress. Because obviously, every 2 weeks you're getting more experience.
3 months or anything like that. Yeah,
exactly. And that's I like your strategy, but for listeners, I mean, just be careful. Don't do something where it's like, hey, I made profits for 2 weeks, and then like Ches says, boom, triple account. I'd say gradually build your account up if you want to keep adding in outside money to just, hedge against the risk of, oh, wow, I have a lot more money here all of a sudden, and then doing something that you shouldn't be doing. So I like that strategy a lot, G. That's, for you listeners, that's a very logical approach. Just a few bucks every paycheck, and especially if it's every 2 weeks, that keeps everything in fine balance, with one another. Now, what about charts? I mean, I know you still use charts, but what if we were to look at your chart right now, what exactly would we see on it? Do you have indicators all over the place, or what are kind of your go-to indicators, if you will?
Yeah, let me go ahead and pull up the chart for you. So
Perfect.
I have Bollinger Bands. With the Bollinger Bands, I have the 20 weighted moving average. I have the 50 exponential moving average and the 200 SMA. That's what I have on my chart.
That's it?
That's it.
And I'm assuming you have candlesticks and volume bars too.
Yeah. Oh, and I'm sorry, I have RSI at the bottom. I forgot about that.
Do you use RSI much?
For my options trading, yeah. If something is
you do, okay, interesting. No, you don't have to tell people, but I just, I don't expect you to give away all your little secret sauce here, but some people, do you use RSI, Ches? I can't remember.
So I don't use RSI or Bollinger Bands. Actually, I only have 3 moving averages, the 10, the 50, and the 200. But for my cursor, it has kind of a horizontal bar, and I just, instead of drawing a support or resistance, I can just see it on the chart. Like we touched on, I think, Eaton's podcast, I can literally pull up a chart, and in like a minute and a half or less, I can either put a position on or know if I want to or not put one on. But yeah, similar to that. And Clay, you talk about this in some of the case studies for UCTU members listening. I know where the Bollinger Bands are without having them on, essentially. Not per se like exactly, but I know if something's like way overextended to the downside. So me personally, I don't use RSI, but I can totally see it being useful, and I know other people definitely use it to kind of find things that are overextended in some direction.
Yeah, I think the moral of the story here, though, is all three of us do not have 80 million different indicators all over the place. We're all keeping it simple because, at the end of the day, whether you're, micro scalping like I am, or you're doing a longer term approach like Ches and G, charting, it's very powerful, but just because it's very powerful doesn't mean it's super complicated. It doesn't mean that you need to have all these gimmick things on it that, now, to preface it like I always do, if you have 80 different indicators and overlays and, this has got to do that along with that, as long as that happens, but that can't happen, and it works for you, then awesome. But don't go into, charting with the mindset of it's got to be, a vastly complicated thing. So, how are you doing? You touched on this a little bit, but do you feel a pretty big difference in terms of losses now? Because you still take losses though, right? Doing this long-term thing. It's not like every single trade is a winner. Is that accurate?
Yeah, of course. I wish every trade was a winner, but no, yeah, I definitely still.
Do you notice a difference though from how you would get hot-headed and stubborn from I guess years, because you've been around for years, but from several months ago to now? How do you view a loss now in your mental kind of makeup, if you will?
I just chalk it up to the probabilities. I know, like I said, now that I have pretty much numbers to base it off of, and knowing that there's only so much I can do to a losing trade. I can adjust it. I can do certain strategies to adjust and reduce my risk. But at some point, if that trade is still going to keep going against me, I just chalk it up to the probabilities and know that if I keep my risk small and I keep my number of occurrences up, then eventually the odds will play out.
And it can't be said any better than that. He's not saying that, even if he takes a string of 1, 2, 3 losers, he understands that if he's got an 85, 90% success rate, it's not, if you throw in the towel, then you're not letting the odds play out. So it's all about number of occurrences. We say that a lot. And anybody who's an options trader, especially a farmer, would definitely say that. And Clay, you'd probably agree too, just in general. It's not about one huge trade. It's about many, many trades that add up over time, right?
It's how the casinos make money.
Exactly. And
casinos make money because, you can go on a 5-hand winning streak, a 5-spin winning streak, but the casino knows, hey, you keep spinning. You keep spinning.
Yeah,
we'll,
over
we'll
5
get that money
million
back.
spins. They're definitely getting their money back and a ton more. So
yeah, the pretty option farming. I don't know. Maybe we should just change it up to you guys are really the casino. That's essentially what's going on. You're just letting things play out long over stretches of time, like a casino would. But yeah,
we sell sucker bets. I always make that joke when somebody wants to do something crazy for earnings. I'm like, I'll happily sell you that bet every time, over and over again for the next 10 years. But anyways, before I go on too big of a tangent about being the casino and how great it is to own a casino, Gee, I just want to thank you for being a guest today. Thank you for being able to talk advanced options with me, because Clay doesn't always like to do that. I bore him and his eyes roll in the back of his head. But I know the real reason you did come here today was to borrow my time machine. So if I was to lend it to you and you could go back to any time you choose, what's one piece of advice you would give yourself?
Paper trade more often, like way longer. Paper trade, I would say maybe for a good 5-6 months, and make sure you're comfortable with your strategy. Just because, like I said, I hopped around too many different strategies. So if I would have focused on just one strategy, I feel like I would have gotten consistent, and that's what I actually did these past 6 months. Just focus on one thing. So that's what I would tell myself: focus on one specific strategy and paper trade it to your heart's content.
Now, I'm curious, what, in your opinion, how many occurrences should you get from a paper trading perspective that would then give you enough data to kind of see whether or not your strategy is working or not? Obviously, 1 or 2, not enough occurrences, not enough, from a statistical perspective, that's not a very big sample size. But, I mean, if you would go back 5 to 6 months, okay, but number of occurrences, and I mean, what do you think? How many would be a quote-unquote satisfactory amount of occurrences to have?
That's a good question. I would say, definitely in the hundreds. Anywhere between 500 trades. Kind of just to give you a ballpark, more or less, of where you stand. 500 to 1,000 would be a good number to shoot for.
Paper trading. So, and you could you do 500 to 1,000 within 6 months?
Depending on your strategy.
My day trading, sure, but ours, you're not going to get that. For advanced options stuff, I always say you want like 2 or 3 cycles, and that should equate to like pretty much almost the 6 month mark. So yeah, but it's definitely going to be different for advanced options. Paper trading, I'm sure, day trading, you could probably totally rack up 500 occurrences in 6 months. I don't know if you'd agree with that, Clay, but the rate you trade, I'm sure you probably could.
Yeah, it really does. This is the welcome to you. For you listeners, you've heard, well, that's kind of a gray area. Welcome to one of the gray areas in trading, because it just depends on strategy. What are you trying to do? But point here being, give it enough time to paper trade. And just because you have a successful 1, 2, 3, 4, 5 trades, go at it a little bit more. And then when you go at it a little bit more, just do it a little bit more to make sure that there's no bad habits, to make sure that, your quote-unquote winning streak that you're on in paper trading isn't because you're doing a bunch of stupid bad habits that's creating the winning streak, like we already talked about. But that's a very gray area. Maybe a stupid question on my part to try to pigeonhole you like that, because there is a lot of gray out there. But point though, your point, G, you would want to paper trade more than what you did. So, and I think that's a fantastic bit of advice. So now we're gonna lighten things up here a little bit. What is your favorite movie?
Oh, see, I knew this question was coming, and
so you're well prepared, right?
Still not prepared. I struggled.
Oh, come on.
But I would have to say Focus. It's called Focus. It's with Will Smith.
Yes, that one's not too bad. And Margie, the girl that played in Wolf of Wall Street.
Correct. Yeah, I really like that movie. Just kind of.
Yeah, I like the part where they're at the football stadium and like looking down at the players and all that stuff. And I thought that was a pretty cool scene.
Yeah, I really like the fact that it makes you pay attention to detail.
Yeah, well said.
So what would you say is your favorite meal and dessert?
Okay, you guys are probably going to hate me. I'm Peruvian, so I'm Spanish. My favorite meal, I would say, is called ceviche. It's not sure if you guys ever heard of it, but it's raw fish.
I've heard it on like the fancy cooking shows. I'm not quite sure what it is though.
Yeah, it's a raw tilapia that's cooked in lime juice. Obviously has a couple of more things like onions, corn, sweet potato. But it's really tasteful. I really like it. It has cilantro. You should try it one time.
That sounds really good. I think I will have to give it a try sometime. What about hobbies? What do you like to do outside of the market?
Outside of the market, just reading. I like reading books. I like educating myself. I like math. I like statistics. So I'm always either looking at some YouTube video, something, trying to teach myself something new, and just spending time with my family.
Sounds good. So last question for you. What are 3 words you believe should be associated with successful trading?
I would say determined, consistent, and humble.
Very nice. I can see after listening to your journey why you would pick those 3 words, and I like them a lot. So that's well said on your part. Now, are you going to the meet and greet in Columbus?
Unfortunately, no. You need to have a meet and greet either in Denver.
How come I always have to come to people? How come nobody ever comes to me?
Wow, we got another vote for Denver. Who would have thought we got another vote for Denver?
So you would go to Denver then if we had it in Denver, or are you just lobbying for because Ches is paying you in some penny stock shares behind my back?
No, yeah, I would go to Denver just because it's somewhere that I've wanted to go already, and if there's a meet and greet there, then why not? But I definitely would encourage you to have one here in Florida, since there are so many of us here in Florida as well.
There are a good amount of members in Florida too.
Problem
Clay
now
doesn't
is
like gators or oceans or
well,
any
it's
other
springtime
kind of sea
now,
creatures.
so now we got to wait until it gets cold up here in the north before, because I'm not going to go down to the hot humidity and get gangrene and Ebola from mosquitoes or whatever diseases you have down there in Florida. That's black Zika, whatever that stuff is right now.
You're crazy.
You're in Denver. Then again, you have grizzly bears. Wait,
black bears.
Black bear. Anyways, we're going way off topic. So, but well done on the 3 words. I fully agree there. And thank you very much for hanging out with us and sharing your story. You've definitely made great progress. Congrats on your current increases in your account. Sounds like you've located your comfort level. So we will definitely have to have you back at some point in time. Would you come back at some point in the future?
Yeah, of course.
Excellent. So you mentioned you were an introvert, so a little shy. I can relate. How did this go for you? Was it that bad, or I mean, I don't know if it was necessarily fun, but what was your experience like here?
Yeah, it was pretty smooth. Just having a chat with people that I could actually relate to.
Yeah, there you go. So for you people out there, you people being members that are oh so scared to come on the podcast, I promise, like G said, it's just having a conversation with somebody you can relate to because we're all speaking the same language. So very good. Good sales pitch there for those of
it's free therapy.
For the community members that are a little nervous. But so thank you again, G. As always, thank you to Ches, our esteemed co-host. For you as listeners, a few things before we go. First, if you're listening on YouTube, make sure to check out the rest of the channel, many other videos, and hopefully you decide to subscribe to the channel itself. If you're listening on iTunes or any of the other podcast players, then subscribe, and especially on iTunes, if you could leave us a rating, that would be very, very helpful and appreciated. And then finally, if you're listening at claytrader.com, click that share button. And if you want to leave us a comment down below, we will read them and reply. So we appreciate you as listeners, and we will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.